This is Industrial Edge, a podcast where we discuss the cutting edge world of factory automation and the technologies shaping the future of the industry.
Welcome. I'm your host, Lacey Chandler, owner of Chandler Automation. I'm here with Gorajia with Fidelity Capital, and we are at the 2024 Almond Board Conference in Sacramento at the Safe Credit Union Center. It's a big show this year, more attendees than ever. So we got a lot of action out here, a lot of energy, especially in this booth. Ron, I'm so happy to finally meet you face to face.
Thank you. It's a pleasure being here.
I feel like we've spent a lot of time
a lot of phone and
communicating
email
in
time.
every other possible way.
Yeah.
But to see you in person is really great.
Absolutely. Thanks for having us.
You came pretty far to come to the conference.
Traveled further, but this is a quick short trip from Irvine, California, so it's not bad for us.
Were you looking forward to it?
I was actually.
What are you hoping to learn from the show or get from your experience here at the show this year?
Well, I think first off, it's been a great partnership working with Chandler Automation, meeting you and Sean finally in person. I mean, we've put some great programs together for leasing and financing for all the customers. And just getting to know the industry better. You know, overall, agriculture is not at the forefront of financial services. It sounds like what you and Sean and we've all been talking about is financing solutions for the types of equipment that, you know, the agricultural growers and farmers and anyone involved in the industry needs. Financing is almost something that comes as an afterthought. And I think that with the partnership with Chandler Automation, it's going to be really useful to provide services and alternative methods of expanding their business, scaling their business. As we all know, you know, inflation has been taking place across the globe, and we have equipment that is not only going to increase productivity, hoping that it increases quality control across the board for all of our customers. And I think with that also, it's going to help just expand the industry, you know, and finding different ways of helping converge our services as Fidelity Capital work with you guys. Because, you know, I think in our industry, we've been around 28 years. You guys, Sean and, you know, Lacey and Chandler Automation team has been around for, how many years you guys been around?
7.
7 years. So, I mean, we're pretty heavy hitters in the industry. And I think that converging the services together to really help your guys' clients, mutual clients at this point, and just like I said, learning more about the industry, seeing where there's a need where we can be a good fit.
So let me rewind for a minute. Maybe you can introduce yourself, tell us exactly what you do, what your offerings are, and how that can apply to this industrial automation arena.
Yeah, that's easy. My name's Gorajia. I'm the business director of sales and development at Fidelity Capital. I've been with the firm for 17 years now. So got in when I was about 21 or 22 years old, and I kind of grew up with the company. And our primary services for globally, I would say globally and primarily nationwide, but we've done deals, you know, in Ireland and some other places of South America. But nationwide is, you know, we provide equipment leasing and financing for any type of CapEx expenditures. So, for example, if a company is purchasing a filling line or a vacuum or, you know, a sorter, an optical sorter, or if you're buying a new IT refresh, you know, if you're changing all the computers and servers at your company, we can finance all of that so you don't have to, you know, run to the CFO to get a check for that. And if it doesn't fit your budget, so we provide any type of, you know, third-party financing for any equipment, capital expenditures for your needs.
Can you explain what third-party financing means?
Third-party financing is essentially, most people would have a brick and mortar bank where they have their daily depository financing, you know, where people would send wires or checks and your operating account. That would be your main vessel of obtaining financing. Third-party financing is where we would be the partner working with the vendor of customer's choice, and we would essentially obtain the funds on behalf of you as a customer to send to your vendor so you can obtain the equipment and fulfill your warehouse or, you know, data center or packaging warehouse, whatever it may be, for the growth of your company. And so as far as third-party financing, the reason why I say third-party is we are not your main brick and mortar bank. We're not asking for deposits. We don't give you fancy checkbooks or anything like that. We simply provide financing for equipment. The only caveat to that is we put a lien on the equipment. So we don't have any other liens or covenants or blanket liens on any of the other parts of your company. There's a lot of lenders out there that'll do, liens on your accounts receivable or anything of that sort. We don't do any of that. It's just on the equipment that you're financing.
I've heard you say leasing and I've heard you say financing. Are those things different?
They are different. That's actually a great question. Because it gets mixed up a lot in the industry. Leasing is a vessel of obtaining equipment, and you can lease it to own, and you can own it at the end of the day.
Like renting it?
Essentially, there's different versions of it. You can lease to own. So at the end of the transaction, depending on the structure, you can own the equipment at the end for $1. It's a transactional structure. When you do a lease, per se, like I said, you can own the equipment at the end after the transaction of $1, or you would essentially, it's called a fair market value lease, where you would buy the equipment out at the end, or you can send the equipment back, right? Fidelity Capital will take the equipment back, but you'll get a cheaper rate of funds across that time period as you're leasing it. Now, the accounting benefit to that is you actually are renting it, like you stated. So on your books, it's actually a depreciated asset that you're actually renting the equipment, versus when you're financing it, you're buying the equipment. And again, this is all things you would check with your tax professional, but you would not be able to depreciate the asset in full, and you also cannot expense the payments on that as on your P&L as a rental expense. So each company has different structures and different tax advisors on how they want the lease or finance structure to be, and we can work with both. So we can do a financing arrangement where you just pay the payments, and like financing a car, it's nothing extravagant, or you lease a car, and the only third version of that is you lease and then you just give $1 at the end and you own it. So that per CPH, I think per CPA transaction rules, they just want $1 at the end to make it a structure that works in their accounting practices. So
What is a typical time frame that the lease would extend or the financing would extend? I'm sure it varies, but what is some usual time frames?
Standard transaction structures are anywhere from 36 to 60 months, depending on the size of the equipment. We have customers, I think we've done, $1.5 to $2 million transactions, where customers really want the payment to be a little bit smaller. So we'll spread it across 60. We can even sometimes go 72 or 84 months. That really brings the payment down when you're stretching it into 6 or 7 year terms. And sometimes it's a smaller amount, or sometimes the customer doesn't want particularly to carry the debt for too long. So we can go as short as 12 months. That's one of the nice things about Fidelity Capital is we have flexibility. We're our own direct lending facility. And so we can customize the terms to what fits our customer and you guys as a partner of ours needs to make sure the transaction consummates the way it should.
So if you don't mind taking a minute to simplify, can you walk me through how it might look for a customer to consider financing or leasing through you? Let's say they see this shiny, amazing optical sorter and it's just hands down obvious it's going to improve their business by a landslide,
Yeah.
but they just don't have the cash in their bank. And someone says, oh, you can finance it or lease it. Take me from there to when they get to have the equipment in their facility.
Yeah, that's a great question. If you do love the optical sorter, which is a great machine, you go on the Chandler Automation website, and there's a financing solutions tab there. You would click that, and there's quick, snippets of information of why it's beneficial to lease equipment. And again, obviously you're considering leasing because I'm assuming you don't have the cash, or you just don't have it in your budget for this year, but you know that, like you said, it's going to increase productivity right off the bat. There's a get a quote tool, and you would just fill out your name, application, simple information, name, business phone number, email address, how much, the quote for the equipment is. And if you don't know, I can obtain that information for you as well. And, your federal tax ID number and how long you've been in business. And once I get, just the core essentials of
Does that generate a credit check?
That does not generate a great question. No credit check, because it's all business financing. So our ultimate goal is to have this all be application only financing. And application only financing means based purely on the application of the company, not the personal guarantees or the owners, because I know a lot of the owners in the industry of agriculture in particular is spread across, growers and owners, and there's a vast different sets of ownership groups. And so this is purely based off the business credit. So there will be a credit check on the business, but again, nothing like pulling your Experian or TransUnion or anything of that sort. And once you submit that form, it would come into my inbox. We would have a quote from one of your sales team members, and I would pull the business credit and we would have you qualified. At times, I would reach out to you just to introduce myself, get an understanding of what you guys are looking at. If it's just the optical sorter, if there's, a packaging line that's going to go with it, and just see what the scale of the project is. And at a base level, I like to see 3 months bank statements, just the cover page, just to see what the average balances of the company are. Just see, make sure that there's, sustainable revenue, recurring revenue that's happening within the company. Outside of that, we don't need financials, we don't need tax returns, we don't need anything else, and we'll go from there. Try to keep it very simple. We don't want you to have a bunch of administrative work to just get a quote, because we understand that at the end of the day, the more we add to your list of to-dos on top of everything else that a customer has to do, it just slows down the process if it doesn't kill the process. And so our main ultimate goal is just to make it really straightforward, application only, and we can go application only, I think, up to $750,000.
Wow.
So anything above that, we may or may not need financials and some additional financial criteria information, but up to $750,000 should cover you for a decent amount of equipment.
Okay, so then they are approved for the amount of money that they're looking for. Then what happens?
So once you guys are approved, or once a client's approved, we would send out a financing term sheet, just outlaying, the term, the rate, and the payment structure. And you can let us know which one you want. We would underwrite the documents. We can underwrite within 24 to 48 hours, and you would receive those documents. We prefer DocuSign. In this day and age, it's just much quicker. People are on the road, going to conferences. If you need equipment in your warehouse next week, where are you gonna go find a printer and sign and FedEx me documents or UPS me documents? So we were trying to do everything DocuSign, and we've funded deals as fast as same day for certain transactions, and but typically I would say within 2 to 3 business days we can get a wire out to the vendor so that they can get issue the PO to the manufacturers and get this equipment in your warehouse as soon as possible.
So what I just heard you say was that you send a check to the vendor. So
Correct.
the money's not going to the customer, it's getting paid for directly to the vendor, and then the customer gets their equipment.
Correct. So we would be the sender of all funds to the vendor. And if you've sent deposits or anything of that sort to the vendor, just let us know. That's not a problem. We can always work with the vendor on how to address that. We can, either pay as a shortfall and apply your deposit. But if you want the cash, which at this, I think at this time and age, everybody likes to hold on to their cash. So we can always have, the vendor refund once they get paid by us. So, but we would be the one transacting the funds from our warehouse of funds to the vendor for your purchase.
Do you require insurance on the equipment?
There is equipment insurance required. If your insurance broker does not provide it, we do have insurance brokers that we work with closely that can provide insurance as well.
So can you give me some reasons why it would be beneficial to select financing? Not just because you maybe don't have it in the budget or have it in the bank, but are there other reasons why it would be beneficial to select that option even if you have the money?
The way that the economy's been going, there's been a significant amount of downward pressure on capital. So even if you do have capital, there's so much other opportunities that you can use your cash. For example, marketing, payroll, R&D. And so you can preserve that cash flow, utilize it towards other operating expenses for the company. And ultimately, equipment is a depreciating asset. You don't really want to tie up your funds.
You're saying depreciating?
Depreciating asset, because anything that is brand new today, as far as equipment or just like a car, is not going to be worth equal or the same 3 years from now. So it's best to, financial practices say that it's best to invest your own hard-earned capital into operating expenses and growing your company from within, and using outside third-party leveraging financing, other people's capital, for something that's depreciating on your asset, right? At the same time, you're capturing all the depreciation on your financials, based off, how your tax preparer professional would prepare your books. But the main reason for financing is you don't have to put a downward pressure on your own internal capital just to be able to operate your business or expand your business. For example, a warehouse line or an optical sorter, if you do see that the improvement in your productivity is going to be 4x or 5x or whatever it may be, but you're always going to be working within a certain amount of cash on hand. And every company and every person saves for a rainy day, and so you never really know where your cash is going to be. And so that's why, financing in this great country of America has always been hand in hand with capitalism, and it's always helped having the economy grow is because equipment is always changing hands. Equipment is always increasing productivity. And at the same time, we have financing solutions that we can, provide to all expanding and growing companies.
So what I think I heard you say was 2 reasons why you would select to finance or lease, even if you had the money or even if you had it in the budget, would be to preserve cash so that you can use it in other ways to improve your business or invest it or whatever you want to do
Yeah.
with it. And for some potential tax benefits.
Tax benefits are definitely one of them, depending on how you structure your financing solution. And yeah, like I said, preserving cash. And another actually a third point to that is you can actually forecast a lot better once you finance equipment, instead of writing the check one time or two, depending on how much equipment you're buying, you can actually forecast what your financials for your company will be like, because you have structured payments for a certain amount of time, and you're able to review your financials and say, well, this is what my P&L is looking like. I know that this is going to be, you know, let's just say for 3 years, you're going to have the optical sorter payment for 3 years. And then when that drops off, you know that your P&L is going to adjust accordingly. So it really helps financial reporting and financial forecasting on where the company is going to be going and headed, So I think that's been another tool that we see a lot of customers really appreciate.
You came all this way. I know it's not that far for you, but you took time out of your life, left your family and your cute little baby that's almost 1
Yeah,
to be available to answer questions.
yeah, absolutely.
We've attempted to do the topic of financing equipment justice when customers are curious and want to know more. And there seems to be these questions that we can't quite get to. What are a couple of questions that always come up? It's every time someone's going to ask you. I mean, I can guess one of them.
One of them we know is, what is
What's
the
your
rate?
interest rate?
Yeah, we all know.
So how do you respond to
The
that?
first question is, what is the rate? And I wish I had a magic ball just talking to every customer without seeing anything of their background, credit checks, what the equipment is, what the amount of value is. The truth is, the rate is really based off what the company's credit history is, if they've ever had any borrowings, if they've how long they've been in business, right? A company that's a startup that has no, any history or any credit borrowing, and they, set up shop last month and they want to buy $500,000 worth of equipment, that rate, it's obviously a high risk deal for the creditors. It's going to be much higher than a company that's been around for 15 or 20 years and, family owned, or maybe they have an ownership group and they borrowed money before and paid their bills. It's not really overly complex. I mean, it's just, in a sense, it's just like your personal finance, right? I mean, if you take a car loan and you make your payments, or if you have a credit card and you make your payments, this all gets reported to the credit bureau agencies. And like I said, that we pulled Dun & Bradstreet, that's one of the big credit bureau agencies for businesses, and PayNet. And those are two that really are the backbone of business lending. And we check just how you're paying your bills, how much you've borrowed. Do you have terms with your vendors? If you're purchasing certain types of goods on a 60-day cycle, that shows on your credit bureau. So as far as rate goes, we are very competitive. Sometimes I think we're overly competitive because we really want to service our relationships. And our goal here is not to just do one transaction. A lot of our clients we've been with have been small companies growing at maybe a scale of $1 to $2 million a year, and scaled up to 15, 20, $25 million a year now. And then we have companies that have just run out of cash through other lenders and through other vessels, and have come to us, and we've created a partnership and really been able to put something together for them. So our goal is not just one transaction. It's really to grow with your company and to continually service your needs and growth. And through that, we really foster relationships where we are integrated with other industry experts. And I think that's really how Chandler Automation and Fidelity Capital got in touch. Is we had done a couple transactions together, and we started the conversation of, hey, how can we work together and build this? So I think, that's one of the first questions is rate. Another question is, how fast can you give me the financing, right? We're coming up to year end. I know everybody has sales quotas, sales teams have sales quotas and whatnot. And like I said, our credit approval, we can get within 24 to 48 hours, and we can fund a deal. We've done it as fast once we get documents signed. With DocuSign, we've done it as fast as one business day. And, I'd say average time is 3 days. So, if we start on a Monday, we could get the funds to your vendor, by Thursday or Friday at the latest. I would say those are the two main questions. I mean, I'm always going to get hit with, different questions here and there. Sometimes people don't want to have the equipment for longer than 6 months. They're like, I just want to try it out and I'll send it back. That's not something we're in the game for, right? We're at the end of the day, we're really focused on you owning the equipment and really taking, because there's a lot of, especially in the industry that we're speaking about today, is there's a lot of overhead that goes into transporting the equipment, installing the equipment, running the electrical and things like that. So, but I would say, yeah, those are the two that I think have been the biggest questions I get hit up right off the bat.
Can you speak to the user experience after they've received their financing, they have the equipment that they want, they're going to be in a relationship with you and your company for however long the term is, at least, if not longer,
Of course, yeah.
if you build a good relationship. So what is that experience like? Do they go on a website, easily pay their payments? Are they writing a check? Do they have ways to access their statements and the
Yeah,
ongoing
yeah.
maintenance of the...
That's a good question, actually. We have, so most of our clients prefer to be set up on an automatic ACH withdrawal, so you don't have to send a check. We prefer that as well because with the way that mail has been going lately, a lot of checks are getting lost in the mail. Not to blame anybody, but just checks are disappearing. And so we prefer that every customer sets up automatic ACH withdrawal. That way your payments are paid on time. And like I said, we pull credit bureau reports, so we don't want your painter or Dun & Bradstreet to report something that's out of your control. You will receive a monthly statement online. We can set that up to either your AP email or directly to your accounting team so that gets completely automated. My sales team and myself, and we have some administrative teams, they'll stay in touch with you probably every 90 to 120 days to just check in if you need anything. Usually there's a follow-up call after funding. That's usually going to come from me directly. Hey, let you know that, hey, we've sent over the wire to your vendor. Funds have been taken care of. The timeline is roughly this. We'll let you know if we hear anything otherwise. And if you have any questions for us, there's always a few follow-up items like insurance. You don't need to have insurance at time of funding. We give about a 60-day grace period on insurance as well. So we'll stay in touch with you. Of course, if to ask us, it's, not reach out to you for the follow-up for 90 days or maybe even, 6 months or a year, that's totally fine. I mean, we have a long list of clients that we have to continually check in with, so that's not a problem. But yeah, you'll get your online statements, you'll have ACH payments, and you can log into a certain portal to see where to download your year-end statements and things like that. If not, and sometimes I do have customers that reach out to me from auditors. Their auditors want certain type of information or statement of whatever it may be. We can always put that together for you as well. That takes a couple days to just get from the contracts or accounting team as well. So.
Can you give me an example of a customer that utilized the financing or leasing option and how it improved their business?
Yeah, so I think we touched on this a little bit briefly, is if you're utilizing leasing or financing, I mean, right off the bat, the best thing is that you don't have to use all that cash up front. The second layer to that is you're able to control your expenses and project out what your expenses on your P&L will be for the equipment. And one of the big things that I don't think we've actually touched on at all on this podcast is able to refresh your equipment, right? Sean and I were just speaking when I walked in, is that technology is ever changing, and it is, no matter what industry you're in, technology is changing the forefront of all equipment, whether it's agricultural equipment or cloud computing, or as we know, AI has taken over a huge amount of industries in just quantum computing and whatnot. So the ability to lease and finance is allowing you to spread your payments over a course of period. At the same time, you're able to refresh your equipment every 3, 4, or 5 years, and even sooner if you want, right? But you're able to have equipment, and depending on how you structure the transaction with Fidelity Capital, 5 years down the line, the optical sorter that we're looking at here, that's the star of the show, may be slightly out of date, right? There might be something else that they've come out with, and I'm sure there will be 5 years from the line. So depending on how they structure the transaction, they can actually just choose to resell this equipment through the Chandler Automation remarketing program, or send it back to Fidelity Capital. We'll work with Chandler on that, and they can obtain new equipment and utilize that. So you're always at the forefront of technology. Your productivity and your return on your dollar to your company is always going to be extracting the most money, generating revenue for your essential needs.
Sounds like a very smart decision.
I think so. I mean, I've been doing it for 17 years. I don't see why people don't take, additional advantage, but When people hear the word financing, they for some reason don't want to jump on the wagon, and it takes a little bit of convincing. But that's not a problem because we're not going to pressure anyone to get into a transaction they're not comfortable with. But at the same time, we know and we've seen it really help out your clients as well, is to get the equipment that they need and continue to grow. At the end of the day, that's what it is. I was just speaking to one of the reps from OK Corp, and he was stating that one of their clients, they have a 15-year-old line, but I think they're spending $20,000 to $30,000 a month on spare parts, servicing, maintenance, and continually trying to fix this assembly line. And like you said, $20,000-$30,000 a month is going to add up to probably a lot more than what your payment on a brand new assembly line would be. And so that's where, we had transpired the conversation of saying, well, if they're spending that much on spare parts, and he was telling me it's difficult to get these spare parts nowadays, the manufacturers are slowly trying to phase out from that because at the end of the day, they don't want these old and outdated machines continually operating because it's just more overhead for them as well to manufacture the parts. So to your point, yeah, if you're spending even $5,000-$6,000 a month on fixing the old equipment that has done its well over its lifelong age that it needs to be operating, we can customize a transaction to benefit you, where we can probably get you in something for $3,000 a month, or depending on just exactly what you need, and you won't be writing that dollar amount every month trying to keep an old rig working when you can get a brand new machine and have payments for 5 years. And
It sounds a lot like somebody with an older car. It ends up being a money pit. It's always breaking down on you.
That's me.
You have to take the bus, hitchhike. What a hassle.
Yeah,
when you could just have a reliable car. And go get a new one. But what is the first thing that somebody with an older car thinks? That's going to be so expensive.
Exactly.
I can't afford that.
Exactly.
When you can access an expert like yourself and run through the pros and cons, run through the numbers to see what actually makes sense, because it's possible there's different angles to look at it. I certainly feel more comfortable in a reliable car in the rain, or not worried about breaking down or the unexpected expenses. Like you were saying about controlling your expenses and really watching for forecasting. If you are always spending unexpected amounts of money and no time actually producing your product, that is not a good situation. That is not a smart way to run your facility. But you may think you don't have options. So all this information is really, really valuable. You're used to it all the time because you live it.
Yeah.
But when it's sort of this scary thing, not knowing like if you could qualify, someone's going to look into my financials and I don't even look at my financials, like that can be an uncomfortable place to be.
Yeah.
So it's really useful talking to you because you could see that it's not as scary as it may seem, or as difficult as it may seem. I've heard you say you're financing people who may feel that they would never qualify, but there's ways to make it work.
Exactly.
So I think it sounds like it's worth just at least having a conversation with you.
You hit the nail on the coffin. It's like there's no obligation, right? If we have a conversation, or if you go on the website and just submit your form and we discuss what we can put together for you and we'll customize it. We want it to fit your needs, right? Ultimately. And we've had customers where, we've done structured payments where the payments, lower during certain periods of the year and increases during higher revenue months so that they can actually float the cash on the payment. And so, like I said, we customize it really to make it a good fit for our clients. And like you said, there's no obligation. I think that's the most important thing to say. By submitting a form, getting some information about the equipment or the financing, you're just going to get some numbers in front of you and you can decide on how that fits your business model, right? And it gives you flexibility, right? Because the other opportunity is you just have to write a check, or you're going to keep going through equipment. And, as you and I talk, like, harvesting season, when all the crop comes in, if machines break down on you, you're going to be paying an arm and a leg, and you don't know what, maybe the vendors that are coming out to fix the equipment are charging you 2-3x the price because everybody's trying to fix their equipment at the same time. Because in agriculture, the seasons are the seasons. You can't change that.
Mm-hmm.
And so, like you said, you're speaking about the old car thing. There's only so many times you can change the transmission. And I'm saying that from personal experience that, I had to change the transmission twice on my car. And eventually my wife told me just get rid of it. So yeah, there's just a time where you just got to decide, hey, I got to part ways with the older stuff and just, be up to date. People are updating their iPhones every year, with the newest camera. And why would you not do that for the business that's growing you,
Excellent point.
5-10x on all your other, on your business growth, right? And I know that there's Chandler Automation and again, we work with all different vendors, but Chandler Automation is our partner. You guys provide a plethora of different solutions for every type of client that's out there.
So it sounds like the best way to get a hold of you is to go to www.chandler-automation.com, click on the financing tab, put some simple information in, and get contacted by you.
Hit submit. That's it. You'll get a call from me or a text or an email within at least, if not 4 to 6 hours, then 12 hours. Just depending on what time zone you're in. But yeah, and like we said, we would love to just hear from you, see what needs you have, and we'll customize any financing solution to fit your business needs.
Well, thank you so much for joining
Of
us
course.
here
Thank
today.
you for having me. It's been a pleasure.
Yeah.